How credit union work. Credit unions are non-profit organizations that provide financial services to their members. If you need to save money, pay bills, or get a loan, a credit union is an all-in-one option for those services. How banks and credit unions differ. Credit unions offer many of the same products and services as banks, and the experience of using those services is often roughly the same. However, there are a couple key differences. Investor owned versus member owned. Ownership is the main difference between banks and credit unions. When you open an account at a credit union, no matter how small, you become a partial owner of the institution. All credit unions are owned by their customers, who are called members. Banks are owned by investors, who might not be account holders or community members. Credit union members vote for the board of directors. Each member gets one vote. So all members have equal power. Those members with more money in the credit union don't get more votes than members who have less. For profit versus not for profit. Unlike, unlike banks, credit unions are not for profit institutions. Generally, they operate in the best interest of their members. They don't need to worry about stock prices or corporate investors. However, credit unions are not charities. They must make sound financial decisions, collect revenue, pay salaries, and compete with other institutions. Benefits of using credit unions. Credit unions are often popular with their members, some of whom are fiercely loyal to their institutions. Preferable rates and fees. Because they are member owned, not for profit institutions, credit unions often pass their success on to members in the form of lower fees, higher interest rates for savings, and lower interest rates for loan compared to those at banks. That said, not all credit unions are equal, so it's always worth comparing rates and fees before choosing an institution. Community involvement. Credit unions often play an important part in local economies by offering financial education and outreach and supporting small businesses. They also often support charitable organizations in the community. Shared branching. This is a service that is unique to credit unions. Because credit unions are often local institutions, they don't usually have a widespread network of branches or ATMs. However, in many cases, it's possible to use branches and ATMs of other credit unions for free through a shared branching network. You can make deposits and withdrawals, pay loans, and more. To use shared branching, both your home credit union and the branch you intend to use need to be part of the shared branching network. Better customer service. Since credit unions are member owned non-profits, they often outperform banks when it comes to customer service. If you value building relationship with tellers and loan officers, a credit union or community bank is the best place to find that experience. Services available at credit unions. Credit unions provide financial services to consumers, businesses, and other organizations. The most common offerings are described here, but every credit union is different. Share accounts. At a credit union, savings accounts are called share accounts because you, like all other customers, are a partial owner of the credit union. These are a safe place to keep cash and earn interest on your savings. Certain transfers from a savings account may be limited each month. Federally insured credit unions are backed by the National Credit Union Share Insurance Fund. This government-backed fund covers deposits up to 250000 per account holder per institution. If your credit union is not federally insured, you still might be protected under a private insurance policy, and your money might be safe. But NCU SIF insurance is best because of the government guarantee. Share draft accounts. Checking accounts at banks are usually referred to as share draft accounts at credit unions. Just like with checking accounts, share draft account allow you to spend your money without money limits on payments. There are several ways to access your money, including power and electronic checks, debit cards, online payments, and cash withdrawals. Certificates of deposit. Certificate of deposits are like super-powered savings accounts. They often pay more interest than regular savings, but there's a catch. You need to commit to leaving your money in the CD for a specific amount of time, often 1 to 3 years. If you prefer flexibility, some institutions offer money market accounts, which pay similar interest rates and allow you to access your funds throughout the month. Loans. Loans are available for a variety of uses. Credit unions use the money that other customers deposit to fund loans for borrowers. These include home loans, auto loans, personal loans, and credit cards. Other services. At most unions, you can also get the following: official checks like cashier's check or certified checks are usually offered for a small fee, but you should only need this item for the occasional down payment or other life events. Safe deposit boxes are a safe place to keep important documents and small valuables. Your items are stored behind several locks, but you will need to retrieve anything you need during banking hours. Notary services can be helpful when you need to prove that a signature is valid and official documents. A credit union employee, who must also be a notary public, can place an official stamp on your documents and record the time and date of your signature. The products and services available to you will vary from one credit union to another. Larger credit unions typically offer a broader variety, while small credit unions might keep offerings minimal. Gaining member eligibility. To become a member of any credit union, you need to qualify or are eligible to join. Credit unions are designed to serve individuals and organizations that share a common bond, and people who meet the criteria are known as the field of membership. You can qualify in a number of ways. Your job. Your employer might sponsor a credit union or have relationships with credit unions in your area, so you would have the ability to join those credit unions. Some carriers also qualify you to be part of a credit union. Your individual employer doesn't matter because your occupation gets you in. Your location. Some credit unions are open to anybody who lives or works in a geographic area. For example, you could qualify similar because you live in a particular city or country. Even going to school or worshipping in an area you don't live in can result in eligibility. A group membership. Being a member of certain groups can make you eligible for certain credit unions. Some groups are open to the public and you can join those groups for the purpose of becoming a credit union member. Other groups like a homeowners association require that you meet other criteria. Your family. If a member of your family is a credit union member, you can most likely join the credit union based on your relative's eligibility. Opening an account. Once you find an instruction that you like, becoming a member is as easy as opening an account. The process is the same as opening an account at any bank or credit union. You will need to provide information about yourself, bring identification, and make an initial deposit, usually 25 to 100 minimum. All credit union customers need to open a basic share or savings account if you are only joining the credit union to get a loan. You will need to become member, which requires that you have a share of the credit union.